Welcome back, guys. Now we'll be learning about the price momentum and loss in momentum. So when the price comes in very quickly, very sharply, we do not trade. However, when the price comes back to the zone for the second time, then we will find opportunity to trade on this price. So let's get started. So how do we trade with the price momentum? First of all, we do not enter the trade when the price is in the momentum stage. So this means that while the price is on a strong upwards, for this example is a bull Marubozu, which means the buying power is very strong. So one very strong bull candle, we do not trade. Okay, I know a lot of traders will try to take this opportunity to go and instant buy because they worry about FOMO, fear of missing out. Now this will be very risky. It is like you are betting on your luck. What if the price suddenly just stop and then goes the other way around? So in the end, you will get very emotional. You lose on both sides. So we do not want to trade when the price is in a momentum stage. However, if you enter the trade at the beginning of the momentum, then it's fine. Due to setup, you have set up and then price just went up, then it's okay. But not during while the price is doing a strong Marubozu, okay, whether it's a buy or a sell. We do not enter in the middle just because we fear of missing out. Secondly, normally the momentum occurs because there is a major news for that particular pair or for that particular metals. Example, GBP pair or gold. Third, what we should do now is to wait for the price to reach until the exhaustion stage. Now I'm going to show you later some examples of how the exhaustion stage will look like. So don't worry, guys, I will show you later on. Normally, exhaustion stage is when you can see that the price will slowly move upwards. Okay, so let's say here is a strong buy Marubozu. Okay, strong buy Marubozu. So up to the stage later on, it will reject and then will come back to the zone in a slowly momentum. So you use some example later. The fourth, we only entry when there is opportunity arise after the price has shown you structure and also confirmation. Okay, so let's have a look at the example. Alright, here is a example of the sell setup. So we mark one of the danger zone, which is the SNR daily danger zone on the resistance side. So price, there's a news or price come in a strong momentum. Two bull Marubozu means this is a very strong buying power is going on right now. So whatever happens here, we don't do anything. We just wait. Okay, then price comes into our danger zone SNR daily. Still don't do anything, guys. Okay, if there is no confirmation of rejection, if there is no setup, do not enter. Let the price does what it want to do. Let the market run by itself. We only entry when the market gave us setup. So as we can see here, price come in strong momentum towards our danger zone SNR daily. So this is our danger zone SNR daily on the resistance, our marking. Secondly, we can see that the price suddenly have rejected this area on the next Marubozu candle and then come back down. Not only that, it has created a new structure. It broke this candle here, even though it's not with a bearish engulfing. It broke this structure here. Okay, example. Now we can see that the seller has entered into the market. If there is no confirmation of rejection, we still wait. Do not enter. Okay, do not entry. We just wait. Leave the zone on. And we'll come back again later to see what is going on. Soon after that, we can see that the price comes back to this area again at a very slow momentum. When the buyer are coming in a slow momentum, where this is what we call an exhaustion stage. Okay, so the momentum has slowed down. This is what we call the loss of momentum. Okay, because why? The seller are pushing the market as well. Okay. So if you learn about SND, what we call this price is looking for liquidity. And lastly, when the price comes into this area again, our danger zone SNR daily, this time price creates a confirmation of rejection, okay, showing sign of reversal. Therefore, we will look into this area for setup, and then we will entry with the F5 setup after there is a confirmation of rejection. So remember guys, there is only 4 things that is going on here. First is the momentum. Second is that the seller has come into this market and make a new structure. Third, price coming back into the market at a very slow pace. This is what we call the loss of momentum, the exhaustion stage. Fourth, only when there is a rejection, when the price comes back to this zone, there is a confirmation of rejection, then we will entry with the F5 setup. I hope you guys are clear with this. So now let's have a look at the TradingView chart. Okay guys, so here is an example of the gold pair. This is on the daily time frame. So what I'm going to show you is this area here. Okay, this as our danger zone SNR daily, where price comes in a strong momentum. All right, price come in a strong momentum in this area. Second, we go to the line chart. We mark the horizontal line as always to mark for our danger zone, and mark our second movement to validate that this resistance is strong. Okay, fourth, we change back to the candlestick chart. We mark the zone from the edge of the candlestick all the way to the shadow. Okay, this is very important. Our marking have to be accurate. So once we are done with this, what we should do next is to go look for smaller time frame. As we can see here, the price comes in a strong momentum, bull side. Okay, bull candle 1 2 3, and then it reject. So when it reject, actually we can look for setup here. However, if we have missed the setup here, it's fine, because on the daily structure it shows very strong momentum on the bull side. We can go back again. You can see 1 2 candle, very strong momentum on the bull side. So we go to the smaller time frame. If we miss this structure, is okay, no problem. What we should do is we keep this zone. Price will soon later on come back to retest this zone again. All right, so next, as we can see, the price slowly being pushed by the seller and then being pushed up again by the buyer at a slow pace. The bull Marubozu candle has become smaller and smaller each time when the candle is created. And then at the H4, we can see there's a confirmation of rejection again. So once there is a H4 confirmation of rejection, what should we do? We move to the smaller time frame and look for setup. Okay, so as we can see at the first beginning, before the H4 was formed, they were set up in the QMR N5 here. Okay, we can mark this as our entry point as well. But then I can see there's a potential QMR N5 at the bottom here. Normally price will come to the closest setup before it continues its trend. So I will first look into this setup first. What we should do now is mark our horizontal line. As you can see, this is a QMR. This is the left shoulder. We mark from here all the way to the wick just for monitoring purposes when the price comes back to this zone. So we mark the horizontal line as our entry point, which is the left shoulder. So this is a high, low, higher high, and this is the lower low. Next, what do we need to do again after we have found the setup? Do you remember, guys? Think about it again. It is the confirmation of our setup. So it is very important that we do our multi-time frame analysis, which is the key of our setup. When there is confirmation at the higher time frame, then most likely this setup will be profitable. However, guys, remember, we do not want it to be at the late retest. We want it to be the quick retest. So as we can see, our setup here at the M5 is the QMR, which we mark the horizontal line. In the M30 time frame, we can see that this is the bearish engulfing which has already formed. So this is a good setup. First is the confirmation of rejection from our danger zone daily resistance with a H4 bearish engulfing. At the M5 time frame, we can see that there is a QMR setup, and our QMR setup in the M30 time frame has a confirmation of bearish engulfing. At the same time, the setup is in the body of the candle, not at the wick here. This SOP, and I have been keep repeating it, hope you guys remember as well. This is very important. Then as we can see here, price has react to our setup. The QMR M5 price comes back to this area, take our order and continue on the downtrend. We are in the profit, guys. So this will be a very good setup. Okay, it gives us the confidence for entry. So the next one will be looking into the buy setup. Now let's look into the buy setup. Similar with the sell setup as well. There is no much different. It's only on the other way around. So price comes in with two bearish candle at a strong momentum towards our danger zone SNR daily support. Price then reject our danger zone SNR daily also very quickly towards the bull side. Now, not only that, it has also broke the structure of this and create a new structure. So this shows that the buyer has entered the market. Then price slowly come into our danger zone daily again on the second time. This time we call it the loss of momentum, where the buyer are actually pushing the seller in the market. However, price need to find liquidity before it continues on the uptrend. So as we can see here, when price has come into the danger zone SNR daily, the H4 H1 will make a confirmation of rejection. So once there is a confirmation of rejection, we then can find the F5 setup in this rejection area. So let's have a look at the MT4 chart. Okay, so here's another example. Same is the goal as well on the daily time frame. So second, we go to the line chart. We mark the horizontal line at the edge of the support, and then we mark the second movement. Next, we change back to the candlestick chart, and then we mark the zone from the edge of the support all the way to the shadow. Now, in this case, there is no shadow or the wick of this candlestick. Okay, if we look here, back at the line chart, this is the capital letter V. And then capital letter V in this area has no shadow. So what happened is, you just mark a zone. A small zone is fine, just for us to monitor, okay? Now, in this case, this zone is going to be super small. Alright, so we just mark a small zone, and then we just use it as a monitoring area only, okay? So next, as we can see here, when the price comes into the danger zone SNR daily, which the zone is very small, we could probably use this horizontal line as a zone only as well, but I would prefer to have a zone so that easy for me to monitor. As we can see here, the price at the H4 time frame has rejected with a bullish engulfing. However, instead of a base, it marks like as a doji. Well, doesn't matter. Most important part is that the pattern of rejection is already showed over here. Okay, reject from this horizontal line of the daily danger zone support and form the bullish doji engulfing. So whatever you want to call it, most important part, we understand that this is a rejection from the danger zone S and R. Next, we can see that there is a potential continuation setup. Okay, now why we don't take this as a QMR setup, The reason why, if we go back here to the H4, the price, there is no confirmation at the H4 as the QMR setup. Means the confirmation is not strong. We have a QMR setup, but there is no confirmation at the higher time frame. Therefore, I do not enter this trade. Now next, let's have a look on this one. So in the M30, we have the potential SNRC1. As we can see here, so let's mark the entry point or the entry zone, which is the Rayleigh base Rayleigh. So this is the Rayleigh base Rayleigh. So we mark this zone, okay? So once we mark our entry point, next what should we do is we mark the horizontal line at the capital letter A, which is the resistance. So once we mark the capital letter A, we can conclude that this horizontal line or this capital letter A is inside our entry point. So this horizontal line will be our entry point. Okay. Next, we change back to the candlestick chart. And then we go to the higher time frame to look for confirmation. As we can see here, the setup is in the body of the H4 engulf and not at the wick area here, because the wick area is considered as high risk. So this is still a low risk setup at the body of the engulf. And then let's see what is the result. Price reacted to our SNRC1 and in the profit. As we come back to this weekly time frame, we can see that the price has come back to this area again. So let me show you in the smaller time frame at the H4. Remember guys, the first setup that we entry with the M30 SNRC1 was here. So this is the first rejection when price comes in on the strong Marubozu sell, okay, acted, come back down again, strong Marubozu again, and then finally reject with a doji bullish engulfing, and we entry on the M30 SNRC1 setup. And then as you can see here, the price comes back at a slow momentum again to retest this area, to retest our zone. All right, so when price comes back in this area, as you can see, there's a breakout, and then price retests this area, and then there's a confirmation of rejection for sell. So here you can have an opportunity to sell if there is setup in the lower time frame. But if you miss this, it's okay. Price then continue again to break again this area. Finally, this time it break with one solid Marubozu on the bullish side. At the same time, price didn't retest this area, but it has shown that price has made a bullish H4 engulfing. So this is a bullish engulfing at the H4. So we can see that the H4 here has showed that the inverted hammer candlestick and then followed by the bull Marubozu. So this means that the buyer has comes into the market with a very strong bull side. Not only that, price comes back and make a bullish engulfing as a continuation. So this one guys is the bull Marubozu with the inverted hammers candlestick, and this is the bullish engulfing with the continuation after a breakout. So we move to the smaller time frame. As we can see here, there is a potential QMC M15 setup. Why I say it's QMC? Because there is a trend line involved. So let's mark the horizontal line. So this is the left shoulder, low, high, lower low, high, high. Next, we mark the zone from the edge to the shadow for our monitoring purposes. Then we draw the trend line. See, from here to here. Now this trend line, as like teacher always said, we only use T-buy. So if let's say price hasn't happens like this, I'm going to show you what we can do is you can draw multiple trend line. There is no fix to it. Okay, you can first draw the trend line from here to here. All right, you can draw the trend line from here to here. You can draw from this body to this body. This body to this body is fine. Okay, so you can draw multiple trend line before the price comes back here. All right, so you have to be flexible about this trend line. what we want to do is just draw a trend line, be flexible about it. Okay, as long if this is the longest, means the most longest price can go, like example like this. So we mark this one. We do not want the price to linger more way far than this one, then it's considered as a late retest. Okay guys, so I'm gonna erase this again. Most important guys, our trend line, the QM head for in this case is the lower low, has to be on the second drive. So we have this as a first drive, second drive, and we will entry at the third drive. As I said earlier, the trend line could be flexible. It could be here, entry could be here. However it is, you can draw multiple trend line, is fine, no problem. We only use this trend line as a confluence. As long the price doesn't move away from this confluence, then we are on the right track. So next, once we have the setup, we have the drawing, what do we need? The confirmation of the setup. So multi-time frame analysis is very important. We go to the higher time frame, as we can see here at the H4 time frame, we can see there's a bullish engulfing and the setup is in the body. It's not at the wick, it's in the body. So our setup is considered as a low risk. Change back to our time frame M15 and then we will see whether the price react. As we can see here, price react to our setup and it comes with profit. So make sure guys, we have all these things and then it's still within the confluence. Price comes in at a very sharp entry and then continue on the uptrend. Okay guys, I hope you understand how does the price momentums works. Most important part is still come back to the basic. We draw the danger zone whenever a price react to it, whether it's a confirmation of rejection or breakout, pullback, there's a confirmation and rejection, doesn't matter. Once there's a confirmation of rejection either side, whether a bull or a bear, then only we will look for setup. Once we found the setup, make sure the setup is in the body of the confirmation. So multi-time frame analysis, with this practice, then we'll be safer and able to control our risk, and probably the win rate will be much higher. So I'll see you guys at the next class.